Well, ladies and gentlemen, we've got an update here on the Trump tariff situation. I've run the numbers, I've given the expectation here in this tweet. Guys, make sure you go follow me on Twitter. Link to that's in the description. Give a little shout out to that. But yeah, this morning, I get inundated sometimes. Okay, not really. There's just a few people that ask me and they say, well, you always say it's like 250, $260 billion. Where do you get that number in terms of, the tariff revenue? Let's go back. Originally, when Trump put the massive tariffs in place, the Liberation Day, the 90% on Vietnam, the 67% on South Korea, whatever it wasn't based on reciprocal, it was based on our deficit. But when he put those in place, the administration had said, and this was with the auto tariffs, which they said it was going to be 100 billion per year. I've looked it up. It's like maybe 50 to 100 billion, give or take. But they said, well, it's around $700 billion in revenue if we keep all the tariffs on, which is a lot of money. The thing that happened was we know, and I'm going to also talk about the 10-year yield because the 10-year yield is spiking again. I call it a golden indicator, but it's a different situation. They're like, well, Trump panicked the first time. I'm not going to get into the yield right now. We'll save that because then it'll be an economics 5-minute thing and it's not going to happen. Not right now. The reality is the administration said it was going to be around 700 billion. That's if Trump would have kept all of the Liberation Day tariffs on. But he takes them off. And now it's a 10% rate on every country. And we don't know what's going to happen with that 10% rate because we're talking about doing trade deals. There's been countries like India that have said, what about zero tariffs on anything for either country? So it's completely free trade. But with trade, it's never free because there's a standard within each country where they can undercut prices depending on different laws within their country. We know that. But the point is, there's that idea. Now, we saw the first trade deal kind of get negotiated, or you know what? It did get negotiated, but it got negotiated in a way to where there was still a 10% tariff on certain things coming over from the UK. And so the administration said, well, we're still going to generate around $7 billion annually from the UK alone. That's after our trade deal, signaling that there likely will still be tariffs on countries after we make trade deals with them. And so what I did is I plugged into the AI, into ChatGPT, what's going on right now, the 10% tariff on all the countries, the 30% tariff on China, which, by the way, the administration, Besant, has said that that is the base tariff, the 30% on China. So the China tariffs are likely going to go back up to what level? It's certainly not going to be 145%. It's not going to be 80%. But they might go back up on certain things. They're going to go lower on other things. That's why calculating this is very fickle because you can't totally calculate it completely. Number one, because we don't know where the trade deals are going to be in terms of the money and the tariffs that remain on. Is it still going to be 10%? Is it going to be 10% on select things? Is it going to be zero within some instances? Maybe with India, we'll see. The point is, and this was actually with me not calculating the auto tariff. So this is really about, you could argue 515 billion annually. I would say maybe around 450 billion or 470 billion per year in tariff revenue with what we currently have. So that's the 10% on all the countries, and that's the 30% on China. This is updated. It's not with the 145% on China. It's with the 30% because they brought them down on everything, by the way, or like most things, down to 30%. Recently, there was another announcement. It was goods that were under $800. Those tariffs also got brought down to 30%. So this is the revenue you're looking at. We'll see what happens. You could say, well, it's even going to be less than that. And I said it will likely go down because there's going to be trade deals. And I would guess that when you're talking about negotiating a new trade agreement, whether they say 10% is the baseline or how they want to do it, Trump does want to use tariffs to generate revenue. We know this. But you look at Trump's big, beautiful bill. If you're talking about, let's just say 500 billion, because I had said maybe I did undershoot it a little bit. Maybe I undersold Trump in terms of my thoughts on the tariff revenue. Maybe it's going to be a lot more than 250 billion. Maybe they keep the auto tariffs on, which have bipartisan support. Maybe it'll be 450, 500 billion dollars. Maybe it'll be even more depending on what happens with China. They up them again. It'll be 550, $600 billion. But let's just say right now that it's 500 billion in tariff revenue is what Trump, 400 billion to 500 billion. They've got the new bill. They want to increase the military budget by 150 billion. The military budget, if this passes, will be $1 trillion. It was 850 billion. Now they want it to be 1 trillion. So that's 150 billion. You also have Trump passing the tax cuts, which will stimulate the economy, but it's also less revenue for the government, along with Trump's campaign promises, no tax on overtime, no tax on tips, no tax on Social Security, things like that. Whether or not this will have, the tariffs will have a huge impact in terms of cutting into the deficit, the debt ceiling was always going to have to be raised. That was inevitable. Now, you can criticize and say, you're talking about the deficit, $2 trillion right now per year. How is Trump going to cut into that? Doge has said they've saved 150, 160 billion. People sit and say, oh, it's not true. They refute the point. They say it's less than that. The issue with Doge is the lack of looking into or auditing the Pentagon and the issues in terms of Medicare, Medicaid, Social Security, the entitlements, which supposedly, I mean, I've seen estimates where it's about $200 to $300 billion in fraud from Medicare and Medicaid alone. And it's pretty crazy that that's another psyop that they're using. Remember the Project 2025 stuff? Now it's like the next thing is, Trump's going to cut your entitlements, which he's not doing. And they haven't even really looked into the entitlements to an extent to where anything of value would be cut. So it's just not going to happen. Now you can say, like the entitlement, something's going to have to be worked out. Now Trump can say we can't do that right now. It's like a nuclear bomb. It's radioactive. You start looking into entitlements. They can create the narrative and build it even wider that, they're going to take away your Social Security. But we know that based off of the issue we have in this country in terms of the retirees per worker ratio, we're going to run into serious problems in terms of funding Social Security. The Social Security right now, the people that are getting Social Security, it's being funded by workers today. It's not like you get this carryover money and you said, well, I was being taxed like a 6% tax on my Social Security. That's my money now. No. When you were in the workforce, that money that you were being taxed on was going directly to the people, the recipients of Social Security. That's how it works. So you can understand the issue we're going to have with the quality of living, everything going up, modern medicine. People are living to be 80, 90, 100 years old, which is a great thing. The problem with that is because of our birth rate issue, we don't have the amount of workers that right now, because we're all in the workforce, right? So we're being taxed, and that money, a certain percentage of that money is going to people that are currently getting entitlements, getting Social Security. It's not like, well, the money carries over and follows you throughout your life to where if I'm taxed, that money is hidden away. No, it goes directly. That's the problem, is we don't have enough workers now to directly pay for the Social Security recipients. And that's why it's going to run into an issue, and they say in 2033, I believe. So I don't know what I was talking about, but the point of this is, we're going to generate around 400 to 500 billion around there, depending on how these trade deals are worked out. I can't give you an exact number. It's impossible because I don't know what Trump's going to do with the tariffs. Number one, he's very unpredictable. To a degree, I think at some point Trump knows, because he loves the economy. He loves the stock market when it goes up. He realizes the uncertainty with the tariffs are an issue in terms of the stock market. So at some point, there's going to be certainty. There's going to be once we get through the summer, there'll probably be a huge new trade deal with China. We'll know the tariff levels for the administration for the 4 years that Trump is in. It's the same thing with all these other countries: India, South Korea, Japan, the EU, just like we did with the UK. And those countries, I mean, we're going to know the tariff situation, and we can guess. You can't do an exact guess because there is a way in terms of which the government brings in less revenue. It's from upping domestic production with companies in the United States investing into the United States and building products in our country, which would lower tariff revenue, but that's a good thing. So, because you're not getting things from overseas, and then the government's not making money off that tax when it comes in. So the point here is that You could say 400, $500 billion. We'll see. Will it help? It'll certainly help. There's no doubt about it. But if you're talking about increasing the military budget by 150 billion, if you're talking about doing all these tax cuts, and then people say, well, the tax cuts pay for themselves. Listen, I agree with tax cuts. I think it's important for people, but that's not true. Normally, you do tax cuts, they say it's going to stimulate the economy. It does, but it doesn't do it to a degree to where it pays for the actual cut, to where the loss in revenue is repaid by economic activity. Normally that doesn't work like that, especially more recently with Trump's 2017 cuts. It just adds to, that's why there was a lot of debt that was added under Trump. And that's what liberals love to say. They always talk about Republicans adding to debt. Yeah, at least we do tax cuts for people. That's tangible. Yeah, we add to the debt because we do tax cuts for people, for middle class people too. Oh, no. There's all these rich people that are working overtime, right? They talk about Trump giving out tax cuts. And even Trump said that, he said, well, it's probably not a great idea, but I would be okay with upping taxes on ultra rich people. The reason is because Trump is doing these tax cuts. You're funding the military even more. You've got to somehow generate revenue, and you already have a $2 trillion deficit. So there has to be some way to generate revenue. So, I mean, they are generating it through the tariffs. I agree. But then the other thing I want to talk about is the yield situation. So you take a look at the 10-year yield, which right now is a reflection of treasuries, the bond market, 4.43%. And we know that it originally had spiked right before they instituted the 90-day delay on the Liberation Day tariffs on every country outside of China. And so people say, well, look at it. It's way back up. Trump panicked the first time with the tariffs. What is he going to do now? There's a distinct difference in what is happening with the economy now versus back around a month ago, the 11th of April, versus where we are now. I had talked about Trump getting a death indicator, which was the yield spiking with the markets crashing. Normally, the yield, and people always, it's always a debated thing, but no, this is how it works. This is what happens when the yield spikes, meaning when the yield goes up. That is normally a reflection of the stock market doing well, because people are taking their money out of treasuries and putting their money into stocks. So the stock market is going up, and the 10-year yield also goes up because it has to be more enticing, because people are taking their money out of yields. So the percent would go up. The issue is that when Trump had the Liberation Day, the markets were tanking while the yield was spiking, which is an indicator you do not want. And so that's why they decided to, this is a different situation. So you say, well, it's up again. Yes, but the stock market has fully recovered from Liberation Day, and it's above where it was before Liberation Day, like April 1st. It's above that. At least the last time I checked it was. So it's a different period. I mean, but we've seen the yield. The yield was sitting at almost 5% back right before Trump came into office. So that would have been the end of lame duck Biden's period. So it's not like this is a crisis thing. The reason it was such a bad indicator was because the market was tanking with the yield spiking. If the market is tanking, you would think the yields would be a lot lower, because people would find, if the market's going down, they would find refuge and safeguard in the yield, which would drive the yield down. So that's the real reason why. I'm not saying this is an ideal look to have the yield this high, but this is not like it was, because the market has recovered. Now, you can say, well, the rate cuts are going to drive the yield down, and I do agree they will be instituting the rate cuts. Is it going to be July? Is it going to be September? The meeting is like July 30th. You can say, well, June 18th, right? So in a month, they're going to do the rate cuts. I mean, if they do a bunch of trade deals, we might be able to get it done. I don't think it's going to happen in June. I mean, you look at the betting, there's such a small percent chance of it coming, the rate cuts in June. That's why I said, well, the rate cuts will probably happen in late July or September. And that's why people are saying it's all going to be Q3, Q4. I mean, that lines up perfectly with crypto. The point is, even Powell has admitted we're going to do the rate cuts we have to. But you have to understand, this is a much different indicator when you look at the 10-year yield where it is now, because the market has recovered. So if the market has recovered, there's more confidence in the market. People are taking their money out to a degree. I mean, there's obviously other things, just like when the yield spiked, it was a lot of foreign countries tanking the yield, or in that case, spiking the yield by selling their bonds. So that's really the difference in terms of the indicator. You have to understand, and this is just the economics of it. So understand that, and listen, I don't think it's ideal that the yield is as high as it is right now, but I mean, it was higher before Trump even got into office. It just depends, where is the market, the stock market, in comparison to the yield. And also, we know inflation. Now, inflation is the bedrock. It's the golden goose. You need inflation to be down. We've gotten numbers now, several indicators for 3 straight months, that inflation is even lower than the expectation numbers. So inflation, I mean, Trump has done an amazing job with inflation, and you can say, well, we haven't felt it yet. I mean, gas, undisputed, and I tweeted this out because people kept saying, well, my gas hasn't gone down. Well, there's a number of things that affect gas prices within a certain state. I mean, they have taxes on fuel. If you live in a rural area, it takes more to transport the gas. It's going to be higher. The point is, in general, if crude oil is sitting at $59 as opposed to where it was, 4 or 5 months ago, which was $75, $80, $90, you're talking about a significantly cheaper, on average, gas price. So, and we're seeing that. Now, you might say, well, I'm not feeling it right now, and I understand that. But the point is, on average, throughout the country, gas is cheaper. The energy is down. That's why when you see the core inflation versus the true-flation is at like 1.63%. The core inflation is at 2.3%, because the core inflation does not take into account food and energy. Energy is way down, so it's driving the true-flation down. True-flation, that's why it's called true-flation. It takes into account everything, and it's an up to the day, up to the minute update in terms of it. The core inflation comes out once a month, right around the 10th. But that's really the point when it comes to that. And so the core inflation, though, it's like 2.3 right now. It's lower than expected again this past month. These inflation numbers, and they're like, well, the inflation actually didn't have an effect like we thought it would in terms of the tariffs being inflationary. But I had said that it never made any sense. Number one, there's going to be a lag in terms of the tariff effect and the effect it has on inflation. Number two, Trump, it took him 10 days to take all of the tariffs off anyways. So now you could say, well, China's different, but even on China, he's brought them down. So there's a minimal impact anyways. And I had said, let's see what Trump does before we go out and say this is going to be a crazy thing in terms of inflation. Believe it or not, inflation is one of the main reasons they will get the rate cuts. And so those are going to be happening as long as the inflation stays tame, which it very, very likely will, based off of all the indicators. So we'll see. But either way, guys, that's just the update on that. Guys, make sure you like the video down below. Also, follow me on X. Links to that's always in the description.